Well, with me, Lavisha Dara. We have snapped the 2 day gains. Nifty ended in the flat in the red, but above that 22,550 mark. And Sensex is Sensex is also down flat in the red, below that 74,350 mark. So yes, we did snap the 2 day gains. Yes, we couldn't defy the global markets like today. We did see recovery in the intraday sessions, but eventually in the last 15 minutes we got sold into. For the week, however, itself, Nifty has risen about nearly 2%, and Sensex is also up about more than 1.5%. Today, once again, Reliance Industries has gained after Macquarie upgraded the counter. So, in just 2 days, we have seen the counter gain nearly 7%. Now, let's see some of the sectors that actually did well. We can see Nifty Metal Index once again quite resilient with about nearly a percent gain. Nifty Media Index with about 2% gain. Nifty Auto Index also did well. However, what did not well for the markets is your Nifty IT index, which sees a cut of about more than a percent at this point of time. But like I was mentioning, that Reliance Industries topping the Nifty 50 charts. Apart from that, we can see Nestle with about 1.5% gain, Bajaj Auto, Bharat Electronics seeing a gain of about 1%. Hindalco, Tata Motors also seeing a gain of about 1% each. On the other hand, if you look at the top losers on the Nifty 50, that looks like IndusInd Bank is topping the charts at this point of time. 3.5% cut coming in for IndusInd Bank. Well, it's third day straight slide for the IndusInd Bank, and the counter has already slid about 5% this week. Apart from that, we can see NTPC, Shriram Finance, some of the tech names like Infosys and HCL Tech also saw a cut of about 1.5% each. But for the week, what sectoral indices did hold well? That was your Nifty Metal Index, up about 8%. Nifty PSU Bank and Nifty Pharma also did well. However, on the contrary, Bank Nifty Index, which actually performed the previous week on a very good note, has underperformed this week. To understand more, we have joining with us Amar Dev Singh, Senior Vice President of Angel One. Amar, good afternoon. Let me see, how do you see the current market mood? Can we say that we are finally on a recovery mode? Because in the last 15 minutes, we did get sold into.
On the show. So basically what we're seeing is a pullback, and the pullback has been quite, I would say, not very phenomenal, but yes, decent pullback which we have seen, and that was on expected lines because on one hand, all the major indices, they were trading at major support zones. Apart from that, all the heavyweights, like you're talking about Reliance, we've seen a sharp pullback in Reliance of almost 100 rupees from the lows. And also we've seen some very strong activity on the metal space. So what we are seeing is that there is some very strong support coming in at lower levels. For Nifty, if I talk, that would be anywhere between 21,800, 22,000. That's a very strong support zone for Nifty, because if that is taken out, then we could witness a real sharp correction towards the 21,000, 21,200, 300 levels. So cracking that would mean 500, 600 points further correction. What we are seeing globally also, global markets are also witnessing some sort of consolidation, but not any major sell-off. There were sell-offs, but again, there was a pullback on the Trump tariff statements, which have become very, very common now.
Okay. Amar, you said about the Trump tariff, but from 2nd April onwards, he's indicated about reciprocal tariffs. Do you expect the volatility to increase from there on, or how do you picture it?
So see, there's no doubt that Trump is going very aggressive on this tariff issue, because somewhere or the other there is this concern that other countries are charging higher tariffs to the US compared to the US charging them. So there is this tit for tat policy which is to come into effect from 2nd of April. But Trump will also have to bear in mind that if the tariffs are really imposed, then how does that impact the inflationary pressure in the US? Because there the cost of goods which are getting imported, they will become expensive. So somewhere or the other, how that plays out is something which Trump cannot ignore. Because on one hand, you have the tariffs which would go up, but on the second hand, if there are inflationary concerns and inflation starts kicking in at a higher level, then the US economy's growth could witness a major slowdown. So that cannot be ruled out as well. So he'll have to somewhere strike a balance between the two. So that also will be interesting as to how exactly he manages to do that.
Okay, okay. Amar, let's talk about broader end of the markets. The small caps have fairly outperformed mid caps so far this week. But do you believe that this is just a temporary pullback given the sharp sell-off they've seen the past few months, or how do you picture it?
Also, see across the board, be the large caps, the mid caps, or the small caps, we've witnessed in the mid caps and small caps, so we've witnessed major sell off anywhere between 30% to 50-60% also in some cases. So I would say that it's more a factor of two things. One is that slowdown in earnings. So when's that going to pick up? That's one major question. So yes, there are expectations that maybe the first quarter could be somewhat weak, and then we could see a pullback happening or a turnaround happening in the earnings growth. So that's one I would say view which the markets are definitely having, that it could be maybe a couple of quarters, but then again the small cap, mid cap, and the large cap, they could start witnessing an uptick in the earnings growth. Also, the government spending, which the Indian government is planning in terms of the tax relief that the government has given, and also in terms of the infrastructure trust, that also should definitely bode well for us. And lower crude prices are definitely helping us on the fiscal deficit. So these are few factors which are going to play out quite well. But yes, in the mid cap or the small cap sector, one needs to definitely be selective and should look at stocks which have at least a companies which have a vision or an outlook at least for the next 5 to 10 years. Because believe me, there's going to be a lot of disruptions happening over the next couple of years. I would say anywhere between 2 to 5 years, and many of the companies would really struggle it out going forward. So that is one challenge which across industries we are definitely going to witness.
Okay. From a sectoral perspective, that you said that the small caps could fairly outperform going ahead, but any pockets of value that you're finding from the small cap space itself?
So in the small cap space, I would say IT is one sector. So those companies which are in the small cap space there. Apart from that, some of the stocks which are into the defense also in the small cap, they could be looked at from a medium term to long term perspective. And auto ancillaries also could be looked at, those who are in the small to mid cap from a medium term to long term perspective. So these are few sectors which one can keep a close watch.
Okay, okay. Amar, you mentioned about auto ancillary. What about auto holistically? Because we saw the February sales data. It was not as disappointed as the street was expecting, but anything that you are penciling in from the auto sector itself, any picks that you have from the space?
Yeah, so see, amongst the auto, I would say that we are definitely going to see interesting times ahead. We'll see how Tesla manages to come in and what they're able to actually achieve in the Indian market, and how that could have an impact on the existing players. Because EV definitely is the way forward, and we are seeing every major auto player scrambling into that space and getting into a fast action mode. So that's one area where I would see a lot of action. Tata Motors definitely is one pick from a long term perspective. This is one stock which has corrected, which actually gave phenomenal returns to its shareholders. But then again, it corrected by almost 50%. So a stock of the likes of Tata Motors correcting from almost 1180 levels to 600. So that's roughly around 50% correction. So we are seeing the stock consolidate. So this is one stock one can look at accumulating from a medium term perspective. So at the current levels, one can look at buying with the recent low being a stop loss. So the stop loss can be somewhere around the 605 levels. And on the upside, a target can be looked at from a short term perspective, 725, 730, from a longer term perspective, around 800, 850.
Okay, okay. Amar, what about the cement space? Because plenty of consolidation is going on there. And recently, we also saw that Ambuja Cement adding more stake into Orient Cement. So, how are you viewing the entire cement space at this point of time?
So if you look at the cement space, see, cement is something which is, I would say, cement, metals, I would say, railways, and all these ports. They're all related with the infrastructure growth, and there we've
Hmm.
seen our GDP going down. So
Hmm.
that is definitely impacting that's definitely impacting this sector to a certain extent. But at the same time, what is helping this sector is the real estate, which has really helped quite, which has held quite firmly. Because what has happened that the real estate developers have learned from the mistakes of the past. Earlier, they were focusing only on HIG, but then they moved into other sectors. So that also has helped. So cement space, we could witness some pullback from the current levels because most of the stocks have corrected here as well.
Okay. Amar, everyone's consensus call has been banks and financial spice space. Is this your take also? What would you say on certain spoil sport, like for instance, asset quality issues? Then you have unsecured lending, which is also playing a spoil sport. So on a financial sector, what is your view?
The financials, I would say definitely positive on SBI, definitely positive on ICICI Bank, definitely positive on Kotak Mahindra Bank, definitely positive on IDFC First from a longer term perspective. And as you rightly said, see what has really played the spoil sport and what definitely needs to be, I'll not say nip in the bud, because the bud has bloomed significantly into a flower, meaning that the unsecured lending part and the
Hmm.
microfinance lending part that needs to be really looked at because of loan and the interest rates which are being charged and that is really something which needs to be looked at very closely by the regulators as to how to ensure that the people are comparatively well placed in that segment. So that's an area because there the percentage of NPAs could be significantly higher because that's unsecured, but at the same time how is the recovery happening, what's the process for that, it has to be fairly balanced. So these are certain critical elements which needs to be further evaluated by the players.
Okay, okay. How do you see the steel space? Because we saw that there were certain safeguard duties that came this week. So how is it going to impact the steel companies? Because this week also we saw metal plays doing well. Certain steel stall also gained some limelight.
I would say, see, steel. We should be doing good because China should be more worried on that as far as we are concerned. Because in terms of the tariffs which are going to kick in, that's going to impact China to a greater extent as compared to us. And overall, we are seeing a sharp uptick in steel prices and in steel stocks. Like if you look
Hmm.
at the Tata Steel this week, up itself, it's up almost 10.5% post correcting. So steel stocks are witnessing some positive momentum, and those who are long, they should stay long. And for example, we could witness anywhere between 5 to 10% rally in these stocks in the short term as well.
Okay, just one last question before I let you go, Amar. Any risks that we need to watch out next week going on, or any other catalyst that investors should keep in mind?
Yeah, there's one caveat which I always now speak of that India's all the negative factors have been factored in the market. So be it the FII selling, be the slow GDP growth, be the downturn in the earnings. So all these have been factored into a very great extent. So what is really going to, if the markets are to correct, that's largely going to be some negative news flow from the US, and it could be technology related, it could be something which could be of the nature of the tariff. But having said that, I would say that's only one I would say area which is of concern because FII selling to a certain extent has been discounted. The good thing is that despite all this selling, the India VIX continues to trade in a very narrow range and lower range. So that's a positive. That's trading between 13, 14. So that's a positive. So I would say it's more has to do with something negative coming from the US, not also China. I would say to a certain extent, any major news development or negative development coming from the US in terms of the jobs data, in terms of any uptick in inflation or some statement by the Fed. These are a couple of things which could impact the markets. Otherwise, I don't see anything really coming out in the short term.
All right, global cues that we need to watch out for. But with that, we have to let you go, Amar. Thank you so much for your time, and we hope that we connect you soon.
Thank you for having me on the show.
All right. With that, we've come to an end of this edition of Closing Bell. We'll be back with markets on Monday, but do have a happy weekend. Thank you for watching.
I'm extremely pleased to be here to be able to conduct this panel discussion. I think we've got market wisdom of about at least, 150 years? Touching
that old, not
closer
that
to 200 years on this panel here. So it's going to be an interesting one. So the idea, of course, we have 30 minutes, so let's make the most of it. The idea, of course, is finding the next sort of big money-making, wealth-generating stock in that sense of where the stock will come from, which sectors, etc. But I think, before you thrive, you have to